Hello everyone, this is Singh, broker, owner of Supermax Realty, 647-961-2639. In today's video, I like to talk about, does it make sense to invest or buy real estate in today's market when a lot of signs are pointing that we have further decline ahead of us, and lot of bears are making very bold prediction of the crash looming in Canadian real estate market in 2023 2022 end. So why not keep your cash and sit on the sidelines? At the same time, I have a lot of real estate bulls. They are also making bold predictions that in next 18 to 24 months, we will see the price start going up when people or the buyers have clear path forward. They feel the prices have bottomed and they are pretty sure the Bank of Canada is done increasing the interest rates. So folks, in this video, before I make my point, I just want to share some data and some information. The first thing is I would like to share a term I studied in my behavior economy class in university. It is called recency bias. So recency bias, folks, is a phenomena. It is used to explain, what you call panic selling and people buying under FOMO or when there's a big bubble. Why people overreact to the news, right? So this bias basically tells us the tendency of people which put greater importance to the news or the recent events without thinking long term what are the other probable outcomes, right? So this basically people start incorrectly believing that the recent events will again fructify or it will happen again. For example, I remember in 1975 there was a shark movie, Jaws, and they said after watching the Jaws movie, lot of people stop going and swimming in the ocean because of the fear of shark coming after them. And I hear some people stop making swimming pools in their backyard because of their psyche still thinking about sharks or something hidden under the water there to grab them. So this is what we call recency bias. See, make in our real estate market or stock market, what I learned as an investor is making bold prediction is a very dangerous game. And if you see lot of TV experts, they have pretty much two agendas. Number one is to either get the clients from their show. Second is to manipulate people emotions or get the retail investors. Especially sometime I watch some stock market podcast or whatever news in big channels. I feel some of the hedge fund managers, they sell you something and ordinary folks just listen to that news and start buying, and those people just dump all the stocks when they reach all-time high, and those people are left holding the bags. So take these kind of things mostly with grain of salt. Do your research, make your own decisions, folks. And the number one question is, so what should I do? Should I stay in the market long term, or jumping in and out is a better strategy, right? So here I always like to share with my clients that always know your risk tolerance and have your investment horizon, time frame in mind, whether you're looking to invest for 10 years, 15 years, 20 years, or you just want to buy and flip. Because it is similar to running 100-meter sprints versus running for a marathon, because those all need different planning, all need different strategies, right? So it is very, very critical, folks. And yes, obviously some people who believe the market crash is coming, they can take their money, sit in the sideline and don't do nothing. But they have to understand the choice they're making of not jumping in the market or not investing for a long time, because they will never be able to time the bottom or point, enter at the point of entry. They will never know what is the opportune time or what is the bottoms they can enter. Nobody knows. And the market can be irrational and it can suddenly go up and suddenly you will be losing a lot of money by entering at that particular time. To make my point, I like to share some data and a study done by market sentiment. So what they did is basically they look at the 3 recent stock market crashes. First one happened in 2000, that is a dot-com bubble. So it burst in 2000 when the S&P benchmark it went down 55%. Second crash they considered was 2008, a subprime crash when the stock market was down 48%, and then 2020 crash, which is more recent, when S&P went down 34%. So what this data did is basically study what 3 kind of investors did in those times. So they take the first investor as a cautious investor who just sit on the sideline. They took the second investor who we call average investor, and the third investor they took in this study is called daring investor. So pre-crash, all these investors were regularly making payments to buying more stocks and investing in there. But as soon as the market crashed 10%, all the 3 investors reacted differently. So first guy who was a cautious investor, he just pulled his money and he sit in the corner and never enter the market again because he was waiting for the market to bounce back. So his strategy was jump in when the market is hot, jump out when there's a crash. So the average investor, he basically keep investing the same amount whether the market was down, up, consistent, what we call dollar cost averaging month over month. The third guy who was a daring investor, so basically he just start investing double his money during those down times. So fast forward, what they found out was the best option was the person who doubled down on their investments when there was a pullback in the market. Their return were 330%, where the worst performing person was person who was very cautious. He pulled all the money and didn't invest it during the downturns. So here is another thing I like to say, guys. If you're an investor, it is painful to look your investments down, but you have to be objective. For example, if you have a condo or a house as a rental anywhere in Greater Toronto area and you're approximately losing $600, yes, there's a lot of money going out, but if you have a stable job, you can survive. Just think objectively. You're losing $600. If you multiply by 12, that is $7,200 you lose in 1 year. If let's say hypothetically you keep the property for next 2 years just to ride the wave, you will be out of your pocket $14,400. Whereas if you get panicked, you sell your house now, which might be down $100,000, $200,000. If you sell now, you have to pay real estate fee, you lost on land transfer tax, you probably pay penalty. You will be out $200,000, $150,000 or $100,000, and you lock in your losses. So just think over it. Losing $100,000 is a good thing or losing $300,000, because I can tell you from the history, these higher interest rate, which probably will go up again in October, probably again in December, but they won't be here forever. Eventually, they have to start coming down once the other indicators like inflation, consumer price index, or job data, everything comes whatever government want to achieve, and it is global. So don't panic sitting in Canada. Go Google, check what is happening in Australia, America, New Zealand, Europe. You will be surprised. So it is a global phenomena. There's no need to panic. All in all, guys, I can only say, yes, I see some people, they complain about higher rental rates in real estate market in around Greater Toronto area. And then, they have sometime resources to enter the market, but they just want to wait. They believe the price is going to come down 50% down. Again, it's a very tricky game, right? And then I see some folks who are what I call keyboard warriors. So they see a headline of an article. They probably don't even read the whole article. It's just kind of a switch bait article. So they don't know what is the content. And those articles, they just keep posting in different groups. just to create fear and panic. I don't see what logic or what they're going to get out of it. Maybe they are looking to buy the market, they want to create a kind of panic so they can get a good deal. I don't know the agenda, right? So you always look, what is there for, some people are there to make money. What is their agenda, right? So always think through that. And all I want to say is, guys, if you're convinced market is going to crash in 2022, 2023, you can sit in the sideline, hold on the cash. That's purely your choice. I'm not here to convert anybody. But what I can say is the real estate wealth is built holding asset over a period of long term, right? Because it's very hard to know short term how market's going to go. But in 20 years, I can assure you, you will have good years, bad years, average years. All in all, guys, stay invested, believe in the asset you bought, and don't panic. Again, this is your friend, real estate agent Jimmy Singh, broker of record, Supermax Realty. If you have any questions regarding real estate, buying, selling, or investing, feel free to call me. My number is 647-961-2639. And if you're a new viewer at my channel, Real Estate Edge with Jimmy Singh, you subscribe. If you like the video, give it thumbs up. If you have any questions, concern, please leave your comments. Thanks for watching. Talk to you soon.